Ralphie here at kiwiradio.nz. I've put on a suit because it's kind of what I used to wear in my 10 years of working in insurance 19 years ago. Showing my age, son. But yeah, let's talk about insurance and some of the dirty tricks the insurance industry does to Kiwis that you don't know about. Let's get into the video. It's of my opinion, I'm not a financial advisor, just a guy on YouTube, but it's my opinion that insurance is designed to keep poor people poor, because rich people can self-insure if something happens, whereas poor people are designed and legally obliged to pay insurance in New Zealand, especially if they co-sign, such as if you have a mortgage, you need house insurance. If you have a car as well, you need third-party insurance at the very minimum. But yeah, let's talk about some of the scammy things that I experienced in my 2 years working for this general insurer. Contents is the most profitable product in general insurance. Usually burglary is the most common insurance claim. The most common access points that a burglar would do is an open bathroom window, for example, and a lot of the time the burglaries are opportunistic events, and so they can only carry what they can, just usually in person, or they might grab a blanket and put it all in there. But insurers know this, that the typical claim for a burglary is around about, say, $2,000 to $3,000. And when you do make a claim, you have to have receipts to make it a viable claim. And a lot of the time, the insurer is judging what they can get back on premiums after a claim. So your premium might go up slightly and so forth like that. They also put a dirty trick in there where total sum insured increases automatically per year without your knowledge. This is because insurers believe that as a consumerist society that we will obtain more possessions each year. So check your policies and note if the total sum insured, if, for example, the maximum payout that you'll have, back when I was working it was around about 30,000, 40,000, and sales agents and insurance agents over the phone like myself were encouraged to have this story, to tell the story to our clients so that they would increase their total sum insured. In fact, it was drilled into us in meetings that a lot of Kiwis were underinsured. Another general insurance product is car insurance. Your car insurance is based typically on your age. So in New Zealand, it is if you have a driver, the main key driver, under 25 years old, they are more likely to have an accident. So that's why you have higher excesses and higher premiums in general. Also, things like modifications to cars will increase premiums, and based on the car model, all that sort of thing. Basically, behind the scenes, you have mathematicians that figure out how much an insurer can milk in terms of profit and how much they can charge in premium. It's a mathematical game that you're playing, almost like lottery, but the other way in terms of getting a windfall due to a gamble. You're getting a windfall if the worst thing happens. Next is home insurance. Now, if you've got a mortgage, you're co-signing with a bank, so legally you must have an insurer before you even obtain that mortgage. However, if you were a cash buyer, you could self-insure. If you have multiple properties and something goes wrong, you'd self-insure using your own money. So that's why insurance, I believe, is designed to keep poor people poor, and rich people are playing a different game. Home insurance, the premium and excesses are also, while I was working for this general insurer, would be calculated based on flood zones, which side of the road you were in. There were so many data points back then, and this is 19 years ago. I can only imagine now that with the disruptor of AI coming into the scene, that those mathematical equations will be precision based, almost like dynamic pricing to the individual rather than communities or areas that you live in. So watch out for dynamic pricing, I reckon, in the future. After selling general insurance for about 2 years, so that's home, car, and contents, I was offered to shadow life insurance for a few months, and I decided against it after my secondment, and this is the reason. In insurance in general, you have KPIs, you have targets that you need to meet, otherwise there are performance consequences to keeping your job. And that's with many sales roles, and insurance is no different. What I didn't like for life insurance is we would play on the heartstrings of the elderly, and I remember a lot of the complaints coming in from customers saying that their monthly premium was so unaffordable. You're talking about thousands of dollars each year, and that's how they catch you, you see, for life insurance, because they like to pitch to new customers, which is people in their early 20s, and their sales pitches, life insurance is so affordable, it's only $1 a month or something like that, just to hook you in. But it's later that you find out that your premiums start to creep up pretty quickly. The sales pitch for that is, you, as a young person, you insure yourself for existing conditions, but check your contract, because contracts can change anytime, and the insurer is the winner because they can just make up the contract or reduce coverage for anything that they want. And this is a testament to, say, for example, you have a natural disaster like the earthquakes we had in Christchurch, for example. You'll notice that they could exempt certain things. The other common one for homes are war is usually an exempt thing, and so they can change those policies at a drop of a coin. They are in charge of that, and not you. So remember, excesses and premiums set by insurers are designed and gamed by mathematicians. These are mathematicians that are trying to milk as much profit as possible and cover as little as possible, despite the sales pitch that they try to give you. The main sales pitch that we were given as insurance agents were peace of mind. So it's always that what if. And I think from a logical kind of thinking, if you put any sort of fear into a person's mind, any logical decisions goes away pretty quickly. So a lot of the time when you're seeing insurance ads, for example, they always lean on the emotional tug. The other dirty trick, and the final one that I'll mention in this video, is insurers have contracts with people like tradies. So the claims side of things, roofers, painters, all that sort of stuff, because they're a company that can buy in bulk, they get a lot of discounts on the claims side of things as well. And tradies are told that if they were to work directly with the client, if they're even allowed, because a lot of the time they're not, they purposely hike up their service fee so that you're always getting a better deal through the insurer. And that is by design. In New Zealand, New Zealanders have to pay tax and ACC. Even if you're self-employed, that is a thing that you legally have to pay. And just remember that that is an insurance company as well, ACC. So what do you think of this video idea? Do you need me to talk more about insurance? Have you got any sort of insurance stories, horror stories and things like that? I'd like to know, and thanks for watching. Now I've actually got pajamas below this, and now I'll show you what I'm wearing